Hi there. This is Bart Walker from McGuireWoods. Welcome to our DSO Q&A for the month. We're trying a little bit of a different format this time around. Our entire material is really just built around questions that we've been asked by clients and friends and folks we know throughout the DSO and dental industry. So hopefully you find it as useful as the folks who have asked the questions. We thought it would be beneficial to have it in this format just because the state of the world and everything is evolving so quickly. We'll hopefully dispense some useful information to you. And because of the different format, I would just mention that on your webinar interface, there is a Q&A panel. So if you do have questions to ask, please submit those. We'd love to answer them. And if there's anything in particular you want us to get to, we'd love for you to send it to us. If we don't have time to get to everybody, or if it's just a topic that's either too broad for this audience or perhaps too arcane or specific that it may require some additional explanation, we'll be sure to follow up after the fact. But please do submit your questions. We've got a decent number that have come in already from promoting the webinar, so we'll certainly start with those. Just by way of introduction, again, this is Bart Walker with McGuireWoods. I'm in our healthcare group and work with our dental and DSO team, which I help lead with a couple of my other colleagues as well. I think if you're tuning into this webinar, you're probably familiar with our expertise in that area. Have been really involved from inception all the way to capital event, sale, and exit on a number of dental platforms, DSO platforms, both on the seller side as well as the private equity fund side or buyer side, as well as our debt finance practice, which is one of the biggest in the country. We also have a fairly robust pipeline of transactional activity in the dental world there as well. Joining me is Kayla Marty, who's also an associate in our healthcare group. She's one of our young, up-and-coming, and all-star associates who works extensively in the dental space. She and I work on a ton of stuff together. Delighted to have her with us today. So I think with that as preliminaries, we can just jump right into it. I thought what we'd start with is just a brief state of the market overview. From our perspective, this is certainly an interesting time period to be an M&A and transactional lawyer. I think beginning in about March, we started to see some signs of panic, or at least some signs of people getting very, very cautious about deals that were pending. We saw a number of transactions go on hold, if not indefinitely, for a period of time. I think like everyone else, we were seeing it unfold. And I think we're afraid of just seeing all the deals crater or just completely die. That really didn't happen, at least from our perspective. All the deals that were in process are still moving forward, albeit slowly or on a more extended timeline. We haven't really seen a ton of deals just completely die. So I think that's good news if you're looking for a silver lining. More recently, we've also seen an uptick in M&A activity. We've seen more new letters of intent, term sheets, sort of the beginning phases of new transactions starting to come across our collective desks. We've also seen deals that were in process start to pick up the pace again and start to pencil in, if not ink in, final closing dates. So from a transactional perspective, we believe that we're beyond the worst of it. We see signs of recovery. And we also think that as a result of this, more and more parties are going to be looking seriously at their options, either in terms of a full exit or taking some chips off the table. We think this will only help consolidation. There are a lot of small providers that were hurt very badly, notwithstanding some of the federal stimulus programs and relief programs that have been out there, which we'll go into a little bit more today. We've received some specific questions on. There are still a lot of providers out there that were hurting pretty badly. So we do expect that activity pace to continue. In terms of other state of the market things that we've seen, at least in the dental world, dental practices are starting to open up again. And again, this is very, very geographically based. Some places have been hit harder than others. Some are opening up more quickly than others. Some places never really shut down to begin with. So you've got a pretty broad disparity between the places that were hit really, really hard versus ones that really weren't touched at all. So you've got a wide range of outcomes here at this point as we sit here on, July 8th. So that's just in very broad strokes state of the market overview. Kayla, did you have anything to add on that score before we jump into some of the questions we received?
No, I would just add, Bart, we've gotten a couple of questions about how the state of the market has impacted lenders and lending relationships, specifically with respect to covenants and compliance, because we know that there's a lot of our clients that may be having trouble right now meeting some of their loan covenants. So what I would say to that is it's a very specific lender to borrower relationship, and it should be looked at in that way. I would not say that every lender is just giving a free pass on Q2 covenants or reporting, but I would say that we have historically been seeing a much more flexible group of lenders when it comes to compliance covenants with existing borrowers. But one thing that we have also seen is for these new transactions that Bart mentioned, extreme scrutiny by our lending clients, and when we're working with borrowers, their lenders, about what the business looks like, what the projections and models are, and how it's going to respond from COVID. I know that that has been a question that people have raised prior to our webinar today, and I suspect there's a number of people interested in it.
Yeah, that's a great point. And also, I think it bears noting that in the transactions that we're seeing moving forward, there's been a heightened amount of scrutiny around how providers have fared during the COVID pandemic, what federal programs they've accessed or tried to access, whether they've taken PPP loans, whether they've taken tax credits, whether they've availed themselves of other stimulus or relief funds. All of that is coming under heavy scrutiny. Already we're seeing government enforcement in the area of fraud and people who have started to take advantage of these programs as well. So that's something else to keep an eye on. That's obviously still evolving, but that's a key point in diligence on both the lender side and the buyer side on a lot of these deals that we're seeing now. Okay, so the next question we got was on the PPP Loan Program, and kind of a couple of questions more specific to it. By way of background, I think everybody should be familiar about this. This is one of the key areas that dentists and DSOs really did have an opportunity to take advantage of a federal relief program. It's really an SBA, or Small Business Administration program, and the SBA is administering this program called the Paycheck Protection Program. There is an aggregate funding to date of about $349 billion. If you recall, there were a couple of different stages of the PPP program. They opened it up at first, and it was just, the rollout was an operational debacle, and the funds were spoken for within a week of the federal government making them available through their SBA lenders. One of the key eligibility requirements is that you have 500 or fewer employees, including your affiliates. The SBA affiliation rules are pretty arcane, and we've fielded a ton of questions about application of those rules. The application is not always straightforward at all. It's very complicated. So we've been helping people a lot with that. The second tranche just recently became available. There's still some funding left on that. The applications reopened just a couple of days ago. The deadline for application for this round of the PPP program is August 8th. So if you haven't taken advantage of that yet, you may want to look into that. The gist of the program is that if you have COVID-related losses, you can use these funds to cover payroll costs, mortgage interest, rent, utilities, basically operational costs. Right now, the rule is that you have to spend at least 60% of that on payroll. So it's really designed to help ensure that employers are not engaged in massive layoffs and to try to stem the tide of unemployment throughout the country. So that's really the intent of it. If you do maintain your head count, then the loans become forgivable. So effectively, if you're able to maintain your payroll, it's not quite free money, but it's pretty close to it, as long as you meet all the other eligibility requirements. The loans have an interest rate of 1%, so again, it's very inexpensive money. The payments are deferred for the initial 6 months. So it really is a good shot in the arm for people who have been able to take advantage of this program. One of the catches or one of the requirements, though, is that you can't then also take the employee retention credit. So there's a tax credit available for retaining employees. The employee retention credit actually predated the PPP program, I believe. I'm trying to think back in the timeline of when these various programs were rolled out. But the initial criticism of that program was that although you could take that tax credit, you wouldn't actually get that from a cash flow perspective until you filed your 2020 returns next year. So from a timing perspective, that wasn't really much of a help to a lot of people, although that's since been revised such that you can take that credit now, and you may even be able to get an advance from the IRS. So that's still an option that's on the table. You just can't do both. Keep that in mind when you're looking at these programs. PPP is the one that at least we've spent the most time with, but it's certainly worth a discussion with your accountant about whether either of these programs make sense for you. One other question that we got related to the PPP program, one of the key aspects of this is maintaining your payroll. And so if you have 100 employees and you let go of one, that will reduce the amount of forgiveness you get on the PPP loan. Obviously, you can't make people come back to work, and that's been one of the challenges the employers have faced. Throughout this period of time, there's been this enhanced unemployment available to the states, and the states have pushed that out to the unemployed individuals who are on those programs. And effectively, in a lot of cases, people are making more money on unemployment sitting at home than they would if they returned to the workplace. So that's been a real challenge for employers. That ends on July 31st, so there is a chance we'll see a kind of a wave of reemployment in August. I think that's to be determined. And now that we're seeing kind of surges in COVID cases throughout the country in various places, that's very much an open question. But in terms of the benefit of the extra unemployment kicker, that kind of goes away at the end of this month. So the question was, how does an employee's refusal or denial of an offer of reemployment to come back to work affect the loan forgiveness under the PPP program? And there was a safe harbor that's promulgated by the SBA that actually says if you make a good faith written offer of employment to your employers, to your workers to come back to work, and then they decline it, then you'll be given grace on that in terms of the calculation of the PPP loan forgiveness. There is a requirement that you report it to your state unemployment office within 30 days of rejection of that offer. So yeah, there is a pathway forward there, and there is a potential solution. Just make sure you check the rules, and it could vary. It could vary state by state as well, so check your state-specific rules just to make sure you're complying. Some states have actually set up mechanisms that allow employers to notify the state unemployment offices. Others haven't quite done that yet. So that's the PPP update. I'll turn it over to Kayla. She's going to talk about a couple of other updates on other federal programs. One is the HHS grant program under the CARES Act. The other is the Main Street lending update, and then we'll also continue to take some more questions as well. So keep the questions coming. Kayla?
Thanks, Bart. And just to add one other point on PPP before we go off of that is, anybody that has already received a PPP loan and did so back in the April-May period of time, you are likely upcoming on your forgiveness period and on your application if you elect the 8-week forgiveness versus the 24-week through the end of the year. So just do be mindful of that. There is a plethora of information available on the SBA's website related to forgiveness. If you have questions, or obviously feel free to reach out. We're happy to always talk about the forgiveness process as well, because we realize many of you are likely in the throes of that right now and trying to decide whether or not you're going to elect the 8-week covered period or the 24-week covered period. So just wanted to add that minor comment before we jump into the HHS provider relief funds. So the dental industry is probably what most people thought of as the forgotten child initially during the HHS provider relief stimulus funds that initially went out. I'm sure everybody on this call knows that the initial provider relief payments were the $50 billion of general distribution that you were only eligible to receive if you made Medicare billings. There are a few dental providers that do bill Medicare, particularly if they have an oral surgery component, but by and large, probably everybody on this call is most focused on the Medicaid distribution under the HHS Provider Relief Fund. So I'm going to spend the most time talking about that. If you do have questions about the general provider relief distributions, we have done a number of other webinars on that and also published a number of articles. So feel free to go to the McGuireWoods COVID-19 relief site to view those. But as of June 9th, there is $15 billion that have been allocated to eligible providers for the Medicaid relief fund that's being administered by HHS. This is going to apply to parties that bill general Medicaid and managed Medicaid. So most people that have dental organizations that are on the phone today are going to qualify, at least their practice entities will. And it's currently estimated that the payment that you would receive from applying for these funds is about 2% of the gross revenue from patient care. And those funds that you receive, they are grants or stimulus funds. They are not required to be repaid so long as you comply with the terms and conditions and you properly use the funding. So unlike the PPP loans that Bart just mentioned, and unlike the Main Street lending funding, they are not loans by the government that have a potential to be repaid. So in order to apply for these, you must submit your application by July 20th. So it's very relevant right now, and you do so using the Enhanced Provider Relief Payment Portal is what it's called. And within that, there's also going to be some guidance for Medicaid CHIP Provider Relief Fund payments. And if you go to the forms and guidance, you can see where the materials that you'll need to put together before you can apply will be located. But one thing that's very important, whether or not you've already applied or you're considering applying, is that you do meet the terms and conditions. Because if you don't meet the terms and conditions, you should not apply for the funds. And if for some reason you realize that you don't meet the terms and conditions and you already received the funds, you should give those funds back within approximately 90 days. And you can do so through the website. So what are those terms and conditions? They appear to be simple, but there is a significant amount of guidance that has been issued on them. If you've been on the Provider Relief Portal, you'll notice that there's an FAQ document, and you can go to the section that applies only to the Medicaid portion of the relief fund. And there's a lot of information that's very useful there. The government also recently put out a very helpful term sheet that identifies fairly clearly what the terms and conditions are and some frequently asked questions, even beyond the FAQs. But just as a brief summary, I'm going to hit on the things that we have seen people trip up or frequently asked questions about with respect to the terms and conditions. So as you all are thinking about applying before July 20th, or if you've already applied, you can make sure that you meet these. So the first and most important one is you cannot have received any of the initial $50 billion distribution. So this is both the automatic $30 billion funds that showed up in everybody's bank account back in April, and the additional $20 billion you had to apply for. So if you received any of those funding tranches, you are not eligible to apply for this $15 billion fund. You also had to have actually billed Medicaid, CHIP, or managed Medicaid sometime during the period from January 2018 to December 31, 2019. So what that means is if you're a new enrollee in Medicare, or excuse me, in Medicaid in 2020, you will not be eligible for this funding. There may be other funding in the future that you become eligible for, but this fund you will not be eligible for. you also had to have filed a federal income tax return for 2017, 2018, or 2019, and you must have provided patient care of some kind after January 31, 2020. And then the last two items are you can't have permanently ceased providing patient care. We've received a lot of questions about that element. What if you temporarily shut your business due to coronavirus? Are you disqualified? The answer to that is no. As long as you did not permanently cease providing patient care, then that element will not knock you out of applying for this fund. And then last, you have to have reported on your Form 1040 from tax purposes, gross receipts or sales from providing patient care. Because remember, the government is ultimately going to calculate the funds that you are eligible to receive based on 2% of your gross revenue from patient care services. And if you have a question about what it means to be patient care services or what qualifies and what does not qualify, there is a number of FAQs on the Provider Relief website that provides more information. And then also feel free to reach out. We're always happy to discuss. So once you have decided that you would like to apply, like I said, you go onto the website. You must go before July 20th, 2020. After July 20th, the portal will be closed and you will not be permitted to submit new information to be considered. Applications are looked at on a rolling basis by the government. Anecdotally, we've seen for clients it takes about 10 to 15 days to receive funds in your account, but you are encouraged to go to the website to collect the required information and then submit. If you have other questions or you want to know more about the program, HHS is also putting on a number of webinars and making available previously recorded sessions that you can register on the site using your login information. There is a link to that. I would highly encourage anyone that has questions to review those. They've been very helpful in the past. We've listened into a number of them, and I do recommend it if you've taken or plan to take the funds. The next question that we usually get from clients is, if I have taken the funds or if I plan to take the funds, what may I use the funds on? So the government has made very clear that you can use HHS provider relief funds of any kind for lost revenue attributable to coronavirus or healthcare related expenses attributable to coronavirus. Something that early on was creating a lot of consternation among our clients and among other people in the industry is what it means to have been responding to coronavirus. The government and HHS came out and said that they will consider every patient that you see during this period of time to be a possible coronavirus patient. And so, for example, you still need the PPE, you still need to keep your doors open, you need workforce training about COVID. All of those things are necessary, whether or not you know that a patient actually has coronavirus or you don't know that somebody has coronavirus. So some of the examples that they've given in their uses of funds FAQ have been supplies to provide care to patients, workforce training, reporting COVID tests, developing emergency operations, acquiring additional resources like facilities, equipment, supplies, staffing, technology to get in contact with patients. All of those are things that the government has said are permissible uses, but there are a plethora of other permissible uses as well. The government has been very clear this is not an exhaustive list in their guidance. So these are just examples that you can take from in considering how you're going to use the funds. We also have talked with a lot of people about the reporting requirements. So you may know under the Provider Relief Fund, the government has indicated that there likely will be quarterly reporting requirements. This will be done via a form that the government provides. Do not submit your own information on your own form. The government has said they will not accept it. So we are awaiting this information so that clients can begin their reporting process and the industry as a whole can begin their reporting process. But one important thing is just to be tracking the expenses that you're using these funds on. Some people that we've spoken to have decided to segregate these funds to make it easy to report and justify to the government how you've used them. And then the last thing to be mindful of on this funding is you probably need to be thinking about how you're going to attest to the funds prior to the 90-day period. So in the requirements for the HHS Provider Relief Fund, once you receive the funds, you have 90 days to go online and attest that you comply with the terms and conditions. This includes a consent to public disclosure of the payments. The government will be publishing who receives these payments, so everyone should be aware of that. And then you also are going to be attesting to complying with the quarterly reporting requirements, so making sure you understand how you are going to track the funds and ensure you can report on them to the extent the government requires you to. And then also making sure that once you receive the funds, you're not planning to use them on any expenses that have been reimbursed from other sources. So I think Bart mentioned this during his PPP discussion, but if you receive PPP funding, it does not preclude you from receiving HHS Provider Relief Funding, but you cannot use the funding for the same expenses. You have to have expenses that are broad enough to cover both sets of funds that you receive, or else you will not be eligible to retain the HHS Provider Relief Funds. The last element to be mindful of, and this does not only apply to the Medicaid funding, it applies to all of the HHS Provider Relief Funding, is there's a restriction on executive compensation, which means you cannot use the funds that you receive from the government to pay someone at a level greater than executive level 2. And what that means is it's approximately $197,000. So you cannot be using the funds to pay someone at a rate greater than $197,000 during the period of time that the funding is in place. So that's just something to be mindful on HHS Provider Relief. That is important right now because the deadline is looming here in a few days. And then I know that we've also gotten a couple of questions about it while we've been on the phone here. One of them is, where can you see a list of the entities that have received PPP funding? So the PPP funding is separately administered through the SBA. I know that they've been trying to make available information about exactly who receives the funding. With respect to the HHS Provider Relief, it's available directly on their website. I'm not certain about the SBA, how they have been publishing it, but for HHS funding, it is available directly on HHS's Provider Relief website.
Yeah, Kayla, I can chime in on the PPP side. There are that information is now becoming available, and there's actually a database that you can download. You can download it either by state or by just in one monolithic Excel spreadsheet. I've even seen a few news stories just in the last few days, kind of highlighting people who have received PPP loans as journalists and other folks in the industry start to mine that data. There are definitely some, I think we anticipated this happening, which is some people who receive PPP loans are maybe not so proud of it or don't want their names in the headlines. For example, there are some companies that have either private equity funding or venture capital funding or other private investment funding that have employees like anybody else and is very much still complying with the intent of these funds, which is to maintain payroll. Yet I could very easily see somebody trying to use this information and politicizing it if they have an agenda against PE funds, for example, and not at all to pick on PE funds. But that's kind of one example that I've already seen in the media that I think people should just be aware of, that information is being made public. But you should be able to find it with a simple Google search, and there are more and more news articles coming out about that every day.
Yeah, good point, Bart. So that's all we have on the HHS Provider Relief Funding. A separate program that has been updated as recently as July 6th is the Main Street Lending Program. Many people on this call may not have heard as much about this program because it does not have a 500 employee restriction on it that we've seen for the PPP, and it's gotten a little bit less press. But I wanted to just touch on it briefly so everybody's aware of what it is and just some very basic terms. We will not go into detail on it like we did on the other two programs, but just a very high level. There are 3 loan types that are being provided by lenders themselves, but the government and the Fed have committed to buying 95% of the loans that qualify. So there's a new loan program, a priority loan program, and an expanded loan program. As is probably obvious from the names, the new loan program is for new loans. For example, the expanded loan program is for existing loans that will be expanded by applicable lenders under the program. But as a very brief overview, this is another program with reasonable interest rates. The interest rate is LIBOR plus 3% on all qualifying loans for people that are looking for relief during this period of time, but may not qualify due to their employees or other affiliations for the PPP loans. So it's something to look at and talk with your lenders about if you're interested in it. But essentially, all of the loans that are going to be part of this program will be term loans with a 5-year maturity. There's also going to be deferred principal payments for 2 years on these loans and deferred interest for up to 1 year. And then the way that the amortization on these loans is going to work is it's going to be 15% at the end of year 3, 15% at the end of year 4, and then 70% at maturity, which of course is the end of year 5. And then they do have different sizes on the loans. So for new loan programs and the priority loan program, those are going to be a minimum size of $250,000. And then the expanded loan program is going to be a minimum size of $10 million. So significantly larger. But where many people are going to focus is what the maximum loan size is for these loan programs. So for new loans, it's going to be $35 million, taking into account that the maximum is also 4 times adjusted EBITDA. So the leverage ratios are really important here. And to the extent you have an outstanding PPP loan that has not been forgiven, it will count in your leverage ratios. Most lenders will, if you have a relationship with the lender, have flexibility to treat adjusted EBITDA how they have in the past with you. And then if you don't have a relationship with them historically, they can treat your adjusted EBITDA like they have similar companies in the past. So there is some flexibility on that adjustment piece to discuss with the lender, but it'll be a very case-by-case basis. And then under the priority loans, the maximum size is going to be $50 million or 6 times your adjusted EBITDA. And then for the expanded loans, $300 million or 6 times your adjusted EBITDA. So just to be aware of the loan sizes, be thinking about how this program potentially could impact you. Feel free to reach out if you have questions. We're happy to discuss in more detail. We just wanted to give a cursory overview on our discussion today so you all could be aware of the program and then reach out if you have further questions. We know this is a program that likely won't be as applicable to many people on the phone today, so we won't spend as much time on it. And then just for the last portion of a couple of questions that we received prior to the call today are questions about employees. So I'll just go through these one by one to make sure we're answering them. We have had a couple of other webinars that deal with employment-specific issues. Those are available on our website, and the link, if it would be helpful for anyone to listen to them, our colleague Joel Spitz has joined us on those to provide a more in-detail description of the Families First Act, which is likely impacting many of you. But for purposes of the call today, I'll go over the questions that we've previously received. So one of them that we received is, would dental offices be required to close, similar to what happened in March and April in the event of a second wave of coronavirus? So this is going to be a very state-by-state issue. We have been tracking this closely as a firm. You may be receiving our state-by-state map of different restrictions that have been put in place on elective procedures and other restrictions. Do continue to track this closely, because if there is a closing or a required closing for dental practices, we expect it will be on a state-by-state basis, although some states have definitively said that they don't plan to go back to the first stay-at-home orders that they implemented. A lot of this is going to depend on how bad a potential second wave is, but it is something to track. And like I said, we'll continue to be putting out alerts on elective procedures and how they are impacted, as well as other stay-at-home orders. The next question we received is a dental practice responsible for paying 2 weeks of sick leave if someone tests positive? So this is largely going to be driven by the Families First Act requirements. So if the employee qualifies for Families First benefits, which essentially means the employer has fewer than 500 employees, but likely more than 50 employees, then the dental practice is likely going to be in a position where they would be needing to pay 80 hours of full pay, up to $511 a day. As you all probably know, we have not received significant guidance or regulations with respect to the Families First Act. So there's still a fair amount of ambiguity with respect to healthcare providers, because under the Families First Act, it suggests that employees may not be eligible for these benefits if the employer is a healthcare provider, and that's the terminology that they use. And right now, that definition is very broad. So it is possible that under additional guidance that is received about the Families First Act, that this standard of 80 hours of full pay up to $511 a day would not apply. But at this point, it is just an ambiguous part of the law. The next question that we received is, if there is a positive exposure to COVID that cannot be tracked back to an in-office exposure, is the office responsible for paying for sick leave? So as a general matter, where the virus was contracted is not going to play a significant role in sick leave benefits. Sick leave benefits really are dictated by the Families First Act, but depending on where the virus was contracted, there still may be workers' compensation considerations, and most people should consult their workers' compensation insurance brokers to determine whether or not there's any type of coverage for a potential in-office exposure, but that is going to be on a very case-by-case basis, and there may also be some state-by-state variation within that question. The next question that we received that is employment-related is there are a number of dental practices that have employees that are wanting to leave work to get tested. And so they're asking the question, is the practice then responsible for paying for the test and their time off when the test is obtained? So the answer to that is generally no. You only need to pay for the test if you are requiring them to get tested to come to work. In that situation, a test would need to be paid for, and you may have some insurance reimbursement for that, depending on the type of insurance that you have, but you would need to contact your broker and determine if that was the case. Bart, do you have anything to add to any of the employment-related points or anything that we've talked about so far? If not, I think we're getting a couple of other questions into the portal.
Yeah, I don't have anything to add to that. I was going to dip into the questions now. I think one of the ones that was asked about the Medicaid Provider Relief Fund, and you probably know better than I, but if it's anything like the previous CARES Act grants, you have to, when you apply, you have to state all the other tax ID numbers of any subsidiaries associated with it. And the question was whether an associate dentist, for example, could apply on their own for these relief payments, or whether it has to roll through the practice or the employer. I believe the answer is it has to go through the employer, specifically somebody that's actually receiving that reimbursement, and in most cases that reimbursement does go directly to the practice rather than the individual provider. But I don't know if you've heard anything different on that, Kayla.
No, that's correct, Bart. So the way that you determine whether or not you're ineligible to submit is the tax ID number that is registered with your Medicaid contract. So it's going to be the entity that receives payment from either the Medicaid program in the applicable state that you're located, or the managed Medicaid program, and that tax ID number gets submitted in connection with your application, and that is how the revenue is aggregated and submitted. That's important because what the government has done is they've received the tax ID number from eligible participants from the state. So before processing your application, they will check that tax ID number against the information that they have received from the state, and that's how it will be verified that you're an eligible Medicaid provider that can receive payments. So it is important that you follow that structure.
Great. I think we also had another question about what types of which types of specialties or practices within dental are bouncing back more quickly than others. This is not scientific at all. I think from our perspective, it's more focused on any types of providers that aren't based on a fee-for-service model. So to the extent there's any kind of capitated payment system or any sort of revenue that's not based on how much services you provide, obviously that's a big factor in helping buoy the practice through this, regardless of whether it's general dentistry or pediatric or oral surgery, perio, et cetera. But in terms of segmenting by provider type, just anecdotally, it does seem like it's coming back pretty quickly for everyone. I've seen, just from my personal encounters, my personal dentist, they're all taking a lot of precautions and they're putting in place a lot of new operational safeguards. They have people waiting in cars, there's distancing in the offices, they're limiting the number of patients in the building at any one time. So that's certainly, I think, putting a lid on their capacity. But in terms of demand, I think some of that is starting to come back. I've not seen, at least in the work that we do, and again, as lawyers, we're sometimes a couple steps removed from what's happening on the ground, but we've not seen any difference, at least in the corporate or M&A aspects of the practices, that any are faring any worse or better than others. But Kayla, I'm curious your thoughts if you're seeing anything different.
Yeah, Bart, I think that one thing that I've been seeing is more on a procedure by procedure level. And you alluded to this earlier, but the more necessary the procedure and the number of those procedures that make up the office, the more volume I've seen for clients, particularly that are going through transactions, have had, just because there is a limit to how long people can wait for those procedures when they may be skittish about going to the office. That's the only thing I would add.
Good point. Good. I think that was all the questions that we had. I don't know that we've got any else in the hopper. So with that, if you have any other questions, please feel free to reach out to us. We'd be happy to speak with you about that and hope this has been helpful. Kayla, do you have any other parting shots before we conclude?
No, thank you everybody for joining us, and just as we close out, remember there are a couple of looming dates. The forgiveness period for PPP opened on June 30th for 8-week elected covered periods. For people that elect the 24-week covered period, that will not open until December 31, 2020. And then for anybody that wants to apply for the HHS Provider Relief Fund, that is going to be closing on July 20th. And then under the Main Street Lending Program, do contact your lender directly to determine whether or not they're an eligible lender for this program. They should now be able to begin interfacing with the Fed on that component between the lender and the government to sell 95% of that loan. But you should begin to be able to apply for any loans under the Main Street Lending Program now as well.
Great. Well, thank you everybody for your participation today. We appreciate all the great, insightful questions. And like we said, if you have any other concerns on your mind, feel free to reach out to us at any time by email or by phone. Our contact information is right here, and you can always find us on the web, obviously. Hope everyone has a great day. Thanks very much.